over the last few weeks, I've been making this list on how many risks you have when you buy real estate. So when you buy a property, you are most likely going to take on a mortgage. So the very first risk that you're taking is a mortgage. A lot of people think that that's the asset of real estate. I mean, it really is, because what you're doing is you're using this house, you're going to live in it, or you're going to rent it out to someone else, and you can use it to just borrow as much money as you want to. You can borrow, let's say, 80% of the value of the house from your bank. Your bank will create that money out of nothing, and you'll be able to just use that money on whatever you want to. So if you have a 80% loan to value with your house, your bank is willing to give you 80% in debt on the value of the house. You can borrow $400,000 against that house, and your bank will create it out of nothing. So this is something that I think is it's a double-edged sword, right? First of all, you get that basically free money. They're going to give it to you at an extremely low rate. But then if the value of the house decreases, I know a lot of people are probably going to go crazy when I say this. The value of the house decreases, you can't pay back that mortgage, you're kind of screwed, right? I think that's a massive risk that a lot of people aren't outlining. What do you guys think of that?
I know people where this exact thing has happened. I mean, it's fairly rare because real estate keeps in line with M2 money supply, and it typically goes up and to the right, and then you have that leverage on top of it, which makes you have outsized returns. But I know somebody personally that lost their house, I think 2008. I mean, Canada was largely slightly unaffected from it, but they were still affected from it, and it's just timing. You know, he didn't have the money, he lost his job, lose the house, and it's undervalued or underwater compared to the loan he has. You declare bankruptcy, then 7 years you're not able to get loans. Like, oh, you run into troubles even when you're legally allowed to again, and all this stuff. I mean, it's a nightmare. It's a nightmare, and it is possible.
I think that this is a risk that not a lot of people are really playing out in their own heads right now. And I don't think it's going to be a risk to Canada as a whole or the housing market as a whole. But I do think we're starting to see a trend towards different towns, different cities, different parts of cities with crime, with drug use, with homelessness. That's the kind of factors that I would be worried about. If I bought a house, say 10 years ago in a decent area, and all of a sudden a few changes in government policy, everything, has started trending downwards, and all of a sudden the value of that house, because nobody wants to live in that specific neighborhood or area of town, the value could actually drop, and you might be sitting on something that you owe more than the house is worth. And again, I don't see this as a huge risk. Big picture housing market, that could happen as well, but I see this more like area by area, very micro lens, where something like this could happen, and there's really not a whole lot of people who are ready for that, I would say. Oh, muted.
Yeah, I completely agree. I think there's not many people ready for that. They don't think that the price of your house can go down. And then on top of that, that's just one risk, right? On top of that, you could go with a lower loan. There are people who take higher. They put even more money into their house, or sorry, less money into their house for the down payment. I think you can get a 3.5% down payment in the US.
Ooh,
where you're taking on 96.5%.
You sure don't own much at that point either, and
Right.
you probably don't feel that connected to the ownership of that house. So if something goes wrong, it makes sense to walk away from it. It doesn't make sense to hold on to it and make things work and power through, and like, you just walk away from it. I mean, that's what happened in 2008 as well. A lot
Yeah,
of these people didn't have any equity in their homes.
at that point, if the value of your house drops 4%, you're underwater. Actually, less than 4%, because you probably paid for realtor fees, you paid for land transfer taxes, you paid for maintenance and repairs. So if it drops like 2%, you're underwater.
And I think that the thing here is that you don't have a sign at your house telling you what your house is worth, right? You don't have a ticker showing that. So I think probably a lot of times when people own it, they're underwater a lot more than they realize on their
Yeah.
loans. And then it just doesn't matter because they wait long enough, and, fiat debasement happens. So houses are relatively scarce. So they end up winning in the end to some
Yeah.
degree, or staying basically even, in my opinion. But yeah, if there was a ticker on people's houses, that might change it. But if you own any other types of assets, or many other types of assets, if there was a problem with it, you could sell it at a slight loss, as opposed to not realizing how down it is, like with houses, like it's usually too late. Like it just becomes too late. Like there could be, a distressed sale next door, and then that lowers the value of your house, right? And you
Yeah.
don't know that that's happening. And then you wait a little while and you try to sell your house, and it's way less than what you thought it was.
Yeah. Let me go through a couple more of these. Oh, sorry. Go ahead, Jor.
I was just going to say, quick aside here. I just kind of had a thought here because I've been paying pretty close attention to the mortgages that they're refinancing houses in the U.S., buying Bitcoin with the proceeds of that, and basically putting Bitcoin and the house on the mortgage there. So when you guys were talking about the ability to buy a house with, like, I think it's 5% here in Canada is the minimum, 5% down payment
For
like
a first-time home buyer.
First-time home buyer.
Yeah.
So let's say that you had enough for a 10% down payment, and you put 5% on the house as a down payment, and you took the other 5% and bought Bitcoin with that. So you're going to have an appreciating asset there in Bitcoin. Whereas if you ever happen to miss a mortgage payment, I just feel like at that small of an amount of actual ownership, kind of what we're talking about here, what's the difference there between 5 and 10%? Like it's not much in terms of the equity in the house. But I feel like if you had that Bitcoin sitting there, you're going to have an asset that's appreciating 40 to 60% per year. And if you ever happen to miss a mortgage payment, if something happens with your job, there's a lot of changes macro happening right now in the world. I feel like you could just shave off some of that Bitcoin and make the payment, which would really reduce your risk of defaulting on that mortgage. Just an idea there.
Yeah. And then on top of this risk, so you have that risk with the loan where if the price of the house goes down, you're underwater forever. Then we have property taxes where you're paying your government basically rent to live on their land. And you're going to pay that no matter what. Even if your house gets paid off, you're still going to be paying property taxes. So a lot of people think that, oh, you can own real estate. You can't, because try not paying your property taxes for like 6 months.
It's not only just that. Property taxes are basically unrealized taxes, because as your house rises in value, again, based on money debasement, they're going to raise your property taxes on assessment. So it's basically taxing you on an unrealized gain, which is crazy.
So your cost basis is decreasing. No, actually, your cost basis is increasing because you're putting you're giving more money to your government. You're just having to pay more for literally just owning the house. So no matter what, you have to pay this. You have to pay this no matter what. It doesn't matter how long you've had the house for. It doesn't matter how much you've paid. There are probably people who bought their houses for like $1,000 100 years ago. Their families are now paying $1,000 a month in property taxes.
Yep.
That's crazy.
100%. Mm-hmm. And the other thing too with that, Rajat, is the property taxes. You said you add it to the cost base, but that's artificial cost base. Like if you ever were to sell that, I guess it's different with principal residence and stuff, and different with rentals and whatever it is. But you wouldn't actually be able to increase your cost base to reduce your gain. That's just an artificial cost base that you're adding to it. Your own cost, your sunk cost.
Yeah. Good point.
It just keeps rising. It goes up forever. And then you have legal disputes. So if you were so the reason why most people buy a house, first of all, most people buy a house to live in. They also use houses as a savings account. So if you buy a house as a savings account, let's say you have a house, you need to save more. You have more money to save and you want to buy another house. You're going to use it to generate cash flow. Because if you don't generate cash flow, first of all, you can't maintain the property. You're going to have to pay for the second property out of your own pocket. You're going to have to pay for maintenance, repairs, property taxes, all that stuff. So the second thing the next issue is that you have to have tenants. So you have people who you may never have met before, who you don't know what their intentions are. You have no idea how they think. You have legal disputes that you may have to deal with at some point in your life because you don't know when this person is going to snap. What if they do something crazy and they do something to your property falls apart, they get stuck under a beam or something, and you're now stuck paying them to live for the rest of your life. So legal disputes, something that people don't even really think about. I feel like this is so rare, but it could happen. I've actually had a friend who had legal disputes on his property. He had to pay $40,000-$50,000. He lost out on a ton of rent, and it almost destroyed him.
Yeah, terrible.
Wow.
And that's something that people don't even think about, right?
Yeah, you're talking about kind of liability stuff here with something, an accident or whatever. But also at the same time, people's lives just change. And when you're a landlord, you basically see their resume, right? Like it's a lot higher risk than hiring somebody to work at your company. I guess, there's things with that, but usually businesses and companies are pretty well insured for something like that. But with houses, yeah, you get a resume to look at. You have a phone call with them, maybe you meet with them, but other than that, like it's kind of just a complete shot in the dark. And one of my tenants actually, I wouldn't say went off the deep end. I think she just went like full bore off the deep end, and like just everything went south. We had to gut the whole basement. A lot of it was out of my pocket. A lot of the time was out of my obviously scarce life here, and it just didn't work out. But that's something where I looked at the resume. I talked with her. I thought I was going to be sitting pretty for a while, and then one day, her life just changed. It was completely out of my control. There was nothing that I could have done there, and that's exactly what you're talking about here. You're putting your equity, your risk into somebody else's hands with real estate.
I think the other thing here to recognize is we talked about like the lack of sort of equity when we have such a big loan, and we might not care about the property that much if we have very small amount invested in it. Renters have nothing invested in it.
Yeah.
So,
damage deposit, but what's that cover nowadays?
yeah, I mean, that would be a point something percent, right, of the actual cost of the home. So yeah, I mean, they just don't have the incentives to maintain it and all of that. And yeah, that's all goes into maintenance, potential legal issues. I mean, right, we got to think of incentives, and tenants and landowners have different incentives, I would say.
And it can go forever. Like your costs could keep increasing for a very long time, right? Your maintenance is going to be there forever. Your property taxes are going to be there forever. You have to have capital on the side. So if you have a property, you have to have a high yield savings account, some kind of emergency fund where you can dip into it if something happens to the property. Let's say your tenant, they do something to the fridge, it breaks, they don't want to tell you that they did it, and you're stuck dealing with it. Or even just, they don't even have to do something to it, right? It
Dishwasher, hot water tank.
Exactly. Roof repairs, shingles, all that stuff. You need to have money on the side to ensure you can pay for those things.
And that capital on the side is opportunity cost that you've missed out on investing.
Exactly. So you can't put that money into Bitcoin. You can't put that money into something else because you don't know when you're going to need it. So you have to have money on the side. You're losing some returns from Bitcoin by having that money on the side. And then next one, you have to have cash flow coming in. If you're not getting cash, you'd be surprised how many people that I've spoken to who are earning negative cash flow on their real estate properties,
right?
Because they can't find somebody who's willing to pay the higher rents. Now that prices are coming down, there are competitors who are willing to lend out the same kind of property for a lower price. So a lot of people are taking losses on the amount of money that they're paying for the property because interest rates have gone up. They have floating rate mortgages in Canada. So they're now paying more for their mortgage. They're continuing to pay for property taxes, and they can't raise their rent by more than like 1 or 2% per year, which is just absolutely insane because the value of the money is decreasing so quick. And it's almost like you're screwed no matter what.
That's what I was going to say is there's a cap on how much rent you can charge in terms of like actual rent controls, but also demand for that housing. But there's no cap on how high your expenses can go in terms of the government printing money, utilities costing more, the value of your house going up, your property taxes inherently going up with that. There's no cap on how the expenses go, but there's a cap on how much you can charge people to live in that house. And it's getting dangerously, that's when I saw that coming a couple of years ago before I sold my rental house. That was my biggest worry, is that I knew costs were going to increase, and I knew that I wouldn't be able to increase my rent to match that. And that's a problem.
Mm-hmm.
Yeah. So your tenants could be a problem. Of course, we went through that. Your tenants could go crazy one day, just destroy your property. You could lose your income. You may not have enough of an income, right? Let's say if you have negative cash flow and you're funding the property with your own income, you could lose first of all that property, then you could lose your own permanent residence because of not being able to pay for the other ones, the mortgage, right? So that's another problem. Then you have vacancies. What if nobody wants to rent your property? That's a huge problem. And a lot of people won't say that to you. They won't tell that to you publicly. They won't tell that to you on X. They won't tell that to you on YouTube because it makes them, I guess, look bad. It makes them feel stupid. It's an ego kind of issue with people not wanting to admit that they were wrong. So a lot of people deal with vacancies and they won't tell you that they are because maybe their rental, the price that they're charging is way too high. That's a massive loss that you have to take account for.
It's very similar to like losing income in your job. If you have to pay more for a house, that you didn't have to pay for before, the net amount there's similar to losing a job or your salary decreasing because you're paying for something that you expected somebody else to be paying for as part of your projections to make this a worthwhile investment for you.
Yeah. Yeah. And then you have market fluctuations. So let's say you need to sell the house, you need to leave. Let's say when you leave, maybe you're not leaving at the market peak. What if the property price drops? Let's say it takes you some time to sell the property. It'll take you 2-3 months. In that 2-3 months, the market could completely turn on you. Of course, that's a problem with Bitcoin as well, but you don't have to wait for 2 to 3 months before you sell. You can sell it right away.
Right.
With real estate.
To the world.
Yes, exactly. To anybody in the world. Anybody in the world can buy Bitcoin. You can be selling your Bitcoin directly to MicroStrategy. You can be selling your Bitcoin directly to MetaPlanet, right? You could be selling your Bitcoin directly to one of us. Anybody in the world could buy Bitcoin. That's not the case with real estate. With real estate, you have a very small market, and the amount of money that market is willing to pay could change significantly within weeks, within days.
Absolutely.
Sorry, boys. I got a short cord on this iPhone now, and it keeps falling and making a huge racket. Just woke up Arnie. Anyways, go ahead.
Okay. So the next one, you are relying on your job to keep paying you. I guess that's another part of income, but your job security matters here too, right? If you don't have job security, you may not be able to get a loan. You may not be able to buy the property in the first place. So you're kind of locked out of the real estate market. Next one, property damage. Oh, go ahead.
I was just going to say, this all comes down, like the job loss and everything. It comes down to the fact that owning a house, people are treating it like an asset, but it really is a liability as well. And it can create a huge amount of pressure. And then, and then you have these market fluctuations. I mean, it can all spiral out of control so quickly. If any one of these things happen, it's a big problem. And all of these things could happen, right?
Yeah.
So, yeah.
You could have squatters in your property. People just go into your property and they don't want to, if your property is vacant for a little while, they just take over and they don't leave. What are you going to do about it?
Or they just stop paying rent. Same kind of thing.
Right. Exactly. And you could, I think in Ontario, you can wait 9 months, or you have to wait like 9 months or something before you file for eviction. And then you have to go through court. It takes another year. So you're going to be paying, basically somebody's going to be living in your property for a year and 9 months before you can even do anything about it.
And there's no way you could sell it at that point either. You can't rent it out. You can't sell it. You can't evict them by force.
Exactly.
And then there's like, other circumstances where those regulations and laws for squatters even changes even more. So like, in 2020 or whatever, like you could get away with anything if you were a renter because there's no way they're kicking you out then. Right.
Crazy. And then other things you can't even control. You have natural disasters, you have war, you have your location potentially. I think one of you guys mentioned it before, but your regulations could change. There could be something that opens up right next to you. Your neighbors all sell their houses. They build up this massive condo. Now your property is right next to this building that you don't even like, right? It could completely destroy the value of your property. It could decrease the amount of cash flow that you get. Then we have war. Who's going to control war, right? People who own real estate. If somebody wants your land, what are you going to do? You can't take it with you. If that's most of your savings, what are you going to do? You're going to just leave it there. You can't do anything about it. Absolutely nothing that you can do. Then there's the devaluation of the property over time. The value of the property is going to decrease. I guess that's related to maintenance. And then you have liquidity risk, where what if you're expecting that your bank will let you renew your mortgage and then they don't? What are you gonna do then? All this stuff. This is just a massive list. It seems like I'm being extremely bearish on real estate, but these are the things you have to consider.
One thing you missed there, and it ties into maybe natural disasters, but insurance can go up a lot year over year. And it's another thing, you have all of these things, risks. These are all things that you don't have control over, right? If a risk is something you have control over, you're able to mitigate the risk to some degree. Some of these you have some degree of control. Insurance, you don't really control. I mean, you can control it in the way of buying property in a location that doesn't have wildfires and hurricanes or something like that. But like, you can only do so much risk mitigation with that. And you have no control over whether these insurance companies are going to jack up rates on you if they're underwater on their liabilities. I mean, it could be really bad insurance payments.
Yeah, I mean, what one longer term thing to think about here, as you were talking about that, Forrest, is that a lot of the insurance companies nowadays are still holding all of their reserves in fiat. And so as that fiat continues to lose value over time, you know, they're going to be much more sticky, much more hesitant. There's going to be a lot more friction to get some of these payouts that might have happened 10 years ago when all these insurance companies were just flush with cash and flush with reserves. The more they start feeling the pain in this fiat system that they're basically, you know, entrenched in, the harder it's going to be to get a payout out of these insurance companies. And that could be the difference between 15 or 20 years of your income from this property is what that insurance adjuster tells you, yes or no, whether that's covered or not. And the more risks there are within the macro environment, the less likely they are, I think, to pay out that insurance. And at the same time, let's say you get a payout, somebody destroys your whole lower floor and you get the insurance payout for that. And then you have to wait X amount of months to actually pay for that. And by that time, maybe the costs have gone up like 2x since then. So your difference there because of fiat debasement is also impacting this in a lot of different ways there. And we've seen that over the last couple of years. They printed so much money, the costs actually have gone up two times in a matter of 6 months to a year. And some of these supplies that would be paying for this stuff, it's crazy.
Yeah. And all this just to earn a small amount of cash flow.
That's the thing too. It's not like it's a huge return.
Yeah.
Yeah. If you consider the interest that you're paying, and then you consider all the maintenance and repairs, all the property taxes, let's say, for example, your property value goes up 4 or 5% per year, and then you get negative cash flow, at the end of it, you're probably earning on your 3.5% investment, you're probably earning like 30% max. And that's best case scenario. In the worst case scenario, where the value of the property decreases, actually for rental properties, you can't even get, I don't think you can get 3.5% loans.
For the down payment?
For the down payment.
That's what I was going to say. I wasn't sure if we were talking about houses to live in or houses to rent out. Because yeah, in Canada, you need 25% down payment.
So you would have, let's say, an 80%, or sorry, you said 25%?
It's either 20 or 25. Yeah, I forget what it is.
So let's say it's 75% loan. So if your return is going to be like 5% on the house, you're going to get at most 20% capital appreciation. That's if you have a 75% loan. And it's not worth it.
And then if it's a rental and you sell it, you're going to pay cap gains on it because you're only cap gains exempt in Canada if it's your primary residence.
Yeah.
And it has to be that for a year, I think, or yeah, I don't know. But yeah, so there's not even a tax advantage to this kind of thing.
And then I think that actually goes into our previous video that we made, the one that we were talking about MSTY. So we were talking about how you can just buy a stock like MSTY. We went in depth into why MSTY is worth it. I changed my thoughts on MSTY over time. I just learned more about it, changed my thoughts. I learned more from Forrest. So we made a video which goes in depth into how you can use
make that
MSTY.
a bit bigger, Jet? Sorry.
Yeah, of course. We went into how you can use MSTY to make a better dividend payment, make more cash flow than you can with a real estate property. So with real estate, you're taking on way more risk. You're getting a way lower reward. You have to do a lot more work. You have to hire more people. You have to deal with banks. You have to deal with loans. Your risk is pretty much your life. Because let's say the value of the property decreases significantly. How are you going to pay back $300K? Nearly impossible because you're taking on leverage to buy real estate. With MSTY, it's completely different. You put in money that you have. You can borrow money to buy MSTY, of course, but the maximum risk is the amount of MSTY you buy. That's the risk. It could go to 0. The likelihood isn't very high, but the risk profile here is different, but the returns are so much better. And then Forrest was mentioning that video where you can it returns the same as Bitcoin. It performs like Bitcoin, the MSTY, the equity shares.
Mm-hmm. Yeah, I mean, wow, you've sold me. Like, it makes no sense to hold. I think a lot of people hold real estate because they've just been told that's how you acquire wealth. Maybe it's
Yeah.
worked for somebody in their life. But there's other options now. Like Bitcoin is changing the way money and purchasing power is acquired. And MSTY is a product that's wrapped Bitcoin's volatility and arbitrages it in some degree and pays you out because of it. And it takes no maintenance to hold something like MSTY. You don't even have to. I mean, you should learn, but you don't have to know even how it works with options and premiums and all of that, right? They're going to manage it for you at an expense ratio of 0.4 for the Canadian version and 0.99 for the US version. And it's going to wildly outperform any sort of rental you could get with a fraction, with no work after the initial investment, compared to real estate, which is a massive headache with so many additional risks. I don't know. It just seems like a no-brainer.
Yeah, to me, I think in the world that we came from, it's quite clear to me that we're moving into a different kind of system here now. The old system's either dying or dead, depending on who you ask. But that in that system, the way that rich people, wealthy people stored their wealth was either in real estate or in gold. And I think that both of those assets are probably the closest thing that you could compare Bitcoin to. With MSTY, Bitcoin is the underlying asset there. I mean, very underlying asset after strategy. But it seems like Bitcoin's kind of replacing both of those. People who owned real estate were people who wanted return, yield on their investment. Gold doesn't produce that. Gold's more of something that sits in the basement and it just kind of keeps up with inflation and often outperforms it. It holds its value really well. And it seems like to me, Bitcoin is kind of a hybrid that's better than real estate, better than gold. You can do a lot more with it. And the really nice thing about it is the average person can participate in it. The average person can't buy a rental house to start earning income because it requires such an investment that most people don't have. 20% into a house to rent out and hopefully make a profit, that's a huge risk. Mm-hmm. Whereas with something like this, you can buy a share, 10 shares in MSTY for $120 and you keep adding to that. And over time, that serves the same purpose with less risk, less initial investment. And it is something that more people can participate in. And when more people can participate in that, it seems like there's going to be more demand and therefore the value of that will also increase over time, which is pretty cool.
And also there's just, it's income right away. It's providing you with that payment. Whereas if you bought real estate, there's going to be this whole period of time before you can actually get income from it. And you're not guaranteed that income either. It could be negative return, right? It could not cover the mortgage, interest, and maintenance from the rental. And, you don't have that risk with MSTY. You're getting paid out. And yeah, the share price could fall, but that's the risk you're taking, is that the underlying share price could fall. And because it's so liquid, you could sell it at any time if you felt like it, you wanted to, or you could just wait further and actually actively be able to know what the price is, as opposed to with a house. And you could wait for it to go higher. And then you could actually make more on the sale of your principal shares if you felt like getting out of that position and you didn't need income anymore, or felt there was a different opportunity elsewhere. It's so much easier to manage as an individual than a real estate investment. Like, yeah, real estate is just not it anymore.
Yeah,
it's not it.
It's too difficult to manage. There's way more risk. You're getting a lower reward. It doesn't really make any sense. Sorry, Jor, can you just share my screen again?
Oh, yeah.
I just want to mention just a couple of things here. If you want to make, so this is what we talked about in the other video that I was mentioning before. Jor will just link it somewhere on the screen. But if you have, let's say you want to make $5,000 in dividends per year. With MSTY, you can put in $12,740 at today's price, and you can get $4,800 in dividends per year. That's not going to happen with real estate. Like what Forrest mentioned there, it's going to take you a couple years to break even, first of all. And then after that couple years, you'll finally start making money if you have a good tenant, if the value of the property goes up, if your interest rate's not too high. You have to make all of those. You have to think about all of those different things. With MSTY, you don't have to think of any of that. You can literally just dollar cost average. You can start with 100 shares, then you can go to 200 shares, and you go to 300 shares and 400. You can keep increasing and keep increasing until at some point you'll be earning so much in dividends that you may be able to replace your job. And this is in Canadian dollars. So if you, with this stock, you get a 40-cent dividend per month. If you have 15,000 shares, you're making $72,000 a year in dividends alone. And over time, this could increase.
You know what I'm excited about, guys? Oh, no, go ahead, Jor.
I was just going to say, what a play that would be for somebody watching this right now to sell their rental house, use the proceeds to put into something like this, and get that monthly dividend from MSTY. That seems like a no-brainer, because to me, it's like the person probably watching this right now, they might have 1 or 2 rental homes. For the most part, somebody in that situation, they're a lot more prone to like sudden, unexpected things that come up in your life. And if you ever had to sell one of those rental homes, as we kind of mentioned, it's very difficult. It takes months. You got to find a buyer in your local area. Whereas with Bitcoin or MSTY, if something comes up and you need to part with that secondary investment asset that you have, you can sell it in 5 minutes. That's a big deal.
Mm-hmm.
Truly. Like it's different for somebody who has 1,000 of these units, 1,000 doors. But for somebody who has 1 or 2 and they've kind of like stretched themselves out to make this work, and something comes up, you need to be able to act fast. Something that's very liquid, and that's Bitcoin and MSTY.
One thing that I want to mention is that this does have risk. We're not saying that it's not risky. It does have risk, but if you look at the amount of risk that you're taking with real estate, this thing could go to zero. But if this goes to zero, all you're losing is your initial capital. With real estate, if your house goes down in value, if it goes down in value by 50%, you're in the hole. You owe money to the bank on an asset that's worth less than how much you owe. So that's something you have to consider.
Yeah. Yeah. And, I like to think that we're pretty smart guys. We're ahead of the curve on a lot of things here. So maybe we've thought about this a little more than the average person. But what happens when real estate investors that are seeking yield, seeking income, they like that kind of product, they learn about stuff like this, and they start to think, hey, this makes a lot of sense. What they're going to do is they're going to start putting their rentals on the market, and that's going to create selling pressure, and that's going to create lower cost for those or to buy those rentals, and that means their principal amount ends up going down, and houses go towards their utility cost, and it makes it more affordable, and people aren't using housing as an investment vehicle to extract some minute small amount that we've discovered, small amount of income from, and they can use something like Bitcoin, which can harvest the volatility through a product like MSTY instead to generate that income. And houses can go back to being affordable for everybody, and people aren't forced to be renters. They could actually acquire a home for a lot less as a principal residence instead of an investment. I think that's huge. This could be really huge. And I think people are going to start recognizing this, and hopefully it will be the small individuals that have, an Airbnb house or some sort of rental apartment or something. And they think, hey, I'm ready to sell this thing and move into something like this that's a lot less risky and potentially more profitable for income per month.
Very well said. And I think the only thing I'd add to that is that the majority, because gold, Bitcoin, real estate are kind of all in the same breath, I don't think somebody's going to sell their rental house and go buy some government bonds. A lot of that money is going to flow into Bitcoin. And when that flows into Bitcoin, it's going to drive up the price of Bitcoin. It's going to make your investment more valuable. It's going to drive up strategy shares. It's going to drive up MSTY. And so as that capital flows out, not only do you get a lower price, by recognizing this right now, but you're going to be able to see this thing through as everybody else starts to figure that out as well.
Yep.
Exactly. Yep.
Well, sorry we usually start our shows with sorry. So we'll apologize to all the real estate investors out there who are going to be leaving comments under this video below, but also not sorry, because all the things we talked about are objective. There is risk to both. We just feel like there's more risk to real estate and there's less reward from real estate. So if you can kind of keep that in mind, then it might make sense to either part with your real estate, put it into something like this, or just buy Bitcoin instead of a rental house. So any last thoughts, or we wrap it up, boys?
If you are a real estate investor, I would, understand that we are Bitcoiners. You might think we're biased. We're talking our own bags, whatever. Just look at these things and evaluate whether you think that they're accurate or not. And likely, do some research on each one of these topics. Evaluate, come up with some metrics of how likely any of these things are to happen. And just evaluate whether real estate really is the best option. I know you're already down that road, but just reevaluate it, because I'm telling you, I think that you're wrong. I think you're wrong if you think real estate is the best asset for you. I think it's not.
Yeah, keep in mind, I was one of those people who liked real estate before. I liked stocks before. It took a lot of work, but I changed my mind. I feel like once you see the reality of what's going on here, once you see the reality of where this could be going, it's a no-brainer. It makes no sense to hold real estate.
You can't unsee it.
Yeah.
I sold my rental home in 2021, bought Bitcoin at the top, but that top turns out to be about 50% of it is what it is now. So it stung for a while, knowing that I could have did a little bit better, but you hold on to Bitcoin for long enough, it usually exceeds your expectations and brings you up to speed pretty quick. So we do have a QR code. By the way, I don't think any real estate investors will be sending some sats, but if you are a Bitcoiner, you agree with what we're talking about here and want to see more of this, you can send some sats to our Lightning wallet there. So thank you, fellas. Another great episode here.
I want to mention, if we were real estate influencers, nobody could pay us with real estate through a QR code.
Send me a brick of your house.
Yeah, they could send you a brick. They might put it through your window though, Rajat.
Send me some rental IOUs.
Yeah.
Okay, thanks, boys. Catch you on the next one.
Yeah.